Which is the better stock to buy, Amazon or Nvidia? Each of these incredible growth stocks were down nearly 50% in 2022. Let's try and understand which one is going to be the better buy in 2023 and beyond. Starting with looking at their respective revenue growths, if we go back all the way to 2014 and look at the quarterly revenue growth, they're very similar, right? You look at the purple and the orange. Amazon had the advantage for a little while, then Nvidia had a better growth rate than Amazon, then Nvidia. Now Amazon again, as Nvidia's growth turned negative 16.5% in its most recent quarter, as the semiconductor industry is inflicted with massive surpluses in chips, and so Nvidia's sales are going to be constrained over the next several quarters as the industry works through this excess inventory. Next, I wanted to look at their operating profit margins going back again all the way to 2014. And this really showed me the magnitude of difference between Nvidia and Amazon. Look at the massive difference in operating margins. Nvidia way ahead of Amazon. Amazon, in fact, has never even approached a 10% operating profit margin. Whenever it came even close to it, it came right back down as the company is a very capital intensive, right? Amazon, every time it needs to grow, it needs to invest in more warehouses, more fulfillment centers, more trucks, more vans, more drivers, more planes, and it just needs to continue putting in massive capital investments and to one day hope to achieve profitability at such large scale. But I don't know when that's going to be. Amazon's already at $500 billion in revenue, and it still can't sustain a reasonable operating profit margin, just 2.5% in the trailing 12 months compared to 25.5% for Nvidia. Moving on, I wanted to look at cash flow from operations. Amazon has shown nice increases in cash flow from operations, although those are trending downward in its most recent few quarters. Like I mentioned, the massive capital investments it took for Amazon to fulfill the boom in customers and customer orders during the pandemic is now backfiring on them because they spent so much cash and it's requiring so much cash to maintain all of this investment that the cash flow has come down from a peak over 24 billion in 2021, and that's come down to 11 billion. Still really good cash flow from operations, 11 billion, but it's on a downward trend and it's going to be constrained in the near term. Similar with Nvidia, very nice long-term growth in cash flow from operations. However, it is also experiencing a downturn. Its downturn is for a different reason. It's because of the glut in semiconductor chips, and now the industry needs to work through this inventory excess before Nvidia can start selling through more of its chips, right? So this is going to be a few quarter at least headwind for Nvidia over the next few quarters. But if we look at growth in cash flow from operations, Nvidia was doing a far better job than Amazon before the downturn even started, before each of their downturns. Next, I wanted to look at their total assets and compare them, and looking at the scale of these two businesses. Amazon has got $420 billion in total assets, and Nvidia only $44 billion in total assets. Of that money, 36 billion is in cash for Amazon and just 1.99, so 2 billion for Nvidia. But it just goes to highlight the scale of Amazon and just showing how difficult it's going to be for Amazon to sustain this kind of growth into the future, even though e-commerce sales, the industry overall, is going to grow. However, I find it difficult for Amazon to continue growing because it's reaching a point where I feel it's demonstrating the opposite. It's demonstrating diseconomies in scale, right? As it's growing bigger, it's becoming more difficult to manage the business. Amazon is making some strategic mistakes, in my opinion. The overinvestment during the pandemic, and now slow to reduce those investments, right? Slow uh, announce layoffs. It has 1.6 million employees. It only announced layoffs of 18,000. That's not really going to make a dent in terms of profitability. And so I like the scale of Nvidia here. It's also got several tailwinds behind it. The growth of cloud computing, the growth of driverless vehicle technology, where Nvidia is a strong player. So it's got tailwinds also, but it's starting from a it's starting from a lower scale point, and it's got more room to grow. And so I like Nvidia in terms of growth potential here. Finally, to answer the question, which one is the better buy, let's look at valuation. And surprisingly, Amazon and Nvidia are trading at very close valuations. Amazon at a forward PE ratio of 62.85, Nvidia at a forward PE ratio of 59.59. Both of them are expensive in my opinion. Yes, they've got great prospects in the long term, but near term, they're both facing significant headwinds, and this is kind of an expensive valuation to pay for a stock facing such strong headwinds in the near term. However, to answer the question, which one is the better buy? I would go with Nvidia right now. I would say Nvidia is the better stock to buy. All right, that's all I've got for this video. Thanks for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.